So next up on stage, we're going to be hearing about China Internet Report. So we're going to have a deep dive into an annual deep dive into the digital landscape of the world's largest economy. So please welcome to the stage your presenter, an investor who's invested in some amazing projects like Solana, FTX, Race Capital's general partner, Edith Yeung.
Hi. Hi, thank you for having me. My name is Edith Yeung. I am the author of the China Internet Report. Started in 2017, China Internet Report is really all about helping everyone to demystify what's happening in terms of China tech. I only have 10 minutes, and the report of this year is 138 pages in partnership with South China Morning Post. So I'm not going to go through 138 pages of it, but going to give you the top 10 highlight of the report. So just as a reminder, China, even though you don't see a lot of Chinese attendees of Web Summit this year because it's still 2 to 3 weeks quarantine, so you're not going to see a lot of the Chinese national. Having said that, China is a huge market. It's still the second largest market in the world. With over 1.4 billion people and 15 trillion GDPs. On internet, mobile internet, and mobile payment is all 900 million, which is three times the population of the US in terms of user base. And you can almost see a parallel universe of what's going on in China versus the US. There's the Alibaba is the Amazon of China. You see Baidu is the Google of China. Tencent is basically Facebook, Zynga, and WhatsApp combined and everything else. So it's definitely really amazing to see Chinese internet to grow on its own without actually coming to the West at all. Number two, venture investing in China is still going really, really strong. In 2020, which many of my family and friends been working like normals since March last year, over 1,800 deals being done with over 41 billion invested. And Sequoia China, in the last 90 days, did 96 deals, which means that more than one investment per day in China. And unlike the US or the rest of the world, you don't see a lot of the corporate venture are that active. In China, it's completely the opposite. Companies like Tencent, Xiaomi, Alibaba are some of the most active venture investors in China. Number three, Chinese government is increasingly really heavy-handed on all things related to the internet. China now implement the equivalent of GDPR, and is cracking down companies like N Group, which did not go public last year, or to DD, which stock price had dropped more than 50% since IPO because of data privacy. And then everyone in China need to play by the rule. It doesn't matter you're Alibaba or Didi or Meituan. There's a lot of crackdown. Now kids cannot play, can only play mobile games not more than 2 hours per week. Or education is all crackdown. It's just a lot of things going on in terms of regulatory impact. Number four, edtech almost disappeared overnight. This is something that Chinese government have decided no more for-profit tutorial, which means the VIP kids of the world really have no more business. And it's actually kind of sad to see. This is a snapshot that I took yesterday. New Oriental, which is a company that's been around for almost 20 years, their stock price literally dropped 95%. Tao, same case, another really, really profitable education company before, have dropped, again, 90% of their stock value. Number five, China always have a love-hate relationship with crypto. And compared to 4 or 5 years ago, China was #1 in crypto trading and #1 in Bitcoin mining. That is no longer the case. And in fact, if you look at what's going on in terms of Bitcoin mining and the hash rate, it has dropped substantially, which in my mind is actually a good thing because it's rebalancing the power of Bitcoin in terms of hash rate. But of course, just because they're cracking down on Bitcoin or crypto trading, Chinese government is pushing their own digital currency, the RMB, and have now opened over 24 million wallets are already open, and they're really going to push that for the Winter Olympic in Beijing. Number 6 is healthcare and semiconductor industry will continue to stay strong. So even though it seems kind of scary with what's going on with ad tech or with crypto, healthcare is going really, really strong. There's over 1,600 internet hospital already been set up. There's so many IPOs from Ali Health, JD Health, Ping An Good Doctor all went IPO in Hong Kong last year, and more to come. And then on the hardware side, because what's going on with the China-US relations, well, sometimes we don't know if Intel or NVIDIA of the world or Qualcomm can sell to Huawei or whatnot. Chinese government really wanted to push semiconductor and also on the hardware side of things. So you will see the Li Auto Xiaopeng and also NIO is just like the Tesla of China. And in fact, Tesla in China, in terms of sales, had dropped quite a bit in the last 12 months because the Chinese local is pushing the local Tesla instead. And then over 7 billion been invested so far in 2021 in the smart car and connected car industry. And of course, China is the leading #1 country in terms of 5G adoption, is way ahead compared to the US and the rest of the world. Number 7, made in China brands are taking over. So what are we talking about? Well, there's Li Ning, which is a really, really famous gymnast from 30 years ago, started a brand now competing with Nike. Instead of Samsung's, they're Medea. Which is most of the electronics or home electronics is actually, instead of Samsung, Medea is leading. SK2 is a really, really well-known cosmetic brand from Japan, but now there's homegrown cosmetic brand in China instead. So there's a very, very strong sort of nationalistic way of wanting to adopt and using local Chinese brand in terms of instead of foreign brand. Number 8, China's fintech sector is opening up. As much as it sounds kind of scary what's going on with data privacy, with Ant Group, but the reality is that there's a lot of American brands like PayPal had done an acquisition in 2020, HSBC, UBS, all of them now are fully operating with licenses to operate in China. Two more points and I'm done. Geopolitics is definitely impacting global growth. You see TikTok is being banned. At least President Trump trying to ban TikTok and didn't happen. It's definitely been banned in India. It's already stopped operating in Hong Kong. So there's a lot of challenges for Chinese companies. And you will see, like in India particularly, 59 Chinese apps been banned. So there's a lot of turmoil that's going on, and a lot of Chinese companies are now basically trying to position themselves not a Chinese company so they can continue to grow globally. And then last but not least, in terms of exit, as an investor, I always have to think about, all right, if all these Chinese companies getting into trouble in the New York Stock Exchange and NASDAQ, what's going to happen? So Hong Kong will be a hotspot for Chinese IPO. You see 35 billion worth of IPO already happened in Hong Kong in 2021, and Hong Kong and then Shanghai, and then you see like the US is now sort of the 4th and 5th choice, so many of the IPOs for Chinese companies. So with that, to recap, Chinese Internet Report is 138 pages long. Thanks to the SEMP team, they've definitely done a lot of work. I primarily focus on investing on the fintech and crypto side of things, but just to highlight, China still is the 2nd largest market in the world. It's almost like a parallel universe. Many of the Chinese companies actually don't even need to come to the West to grow or go IPO. Venture investing is going really, really strong. Venture funds like Sequoia, Matrix Partner, Qualcomm are actively investing in companies that you and I have never heard of. Chinese government will continue to be very, very heavy-handed. And no one, doesn't matter how big you are, there's only one boss in China, and you know who. EdTech basically disappeared. Having said that, healthcare, semiconductor is continued to stay really, really strong. Made in China brand is a thing, and no more trying to basically push more the Huawei or the Medea or the Perfect Story, the local brand for the consumers. And then fintech sectors have a lot of international, particularly US influence. Geopolitics is impacting tech big time, and Hong Kong is now the designated IPO destination for Chinese companies. With that, feel free to follow me on Twitter, Edith Yeung. And if you want to download the Chinese Internet Report, you can just Google it. It's free for you guys to download if you wanted to read more. And with that, that's the end of our presentation. Thank you.